Hello and welcome to the Weekend Investing Daily Byte 22nd of October, a day which a lot of folks will remember. There was bloodshedding on the Indian markets. Markets were weak from the very start and through the day remained weak. There was hardly any pocket in the market which could, sustain this kind of a fall. So there was a broad-based selling across the board, whether it was large caps, mid caps, small caps, any cap. And the essential pattern that this, the head and shoulders pattern that we have been talking about for the last few days has gotten broken. And there seems to be right now no support available in the market immediately. And the consensus seems that we are going lower from here. How much lower is we will see on the charts. Um, the turnaround in sentiment is also coming on the back of bond yields going up everywhere in the world. So US yields continuously going up, the dollar index going up, despite the fact that the Fed keeps talking about the down cycle in the interest rates. So maybe the market is calling that bluff of the Fed that the interest rate cycles are coming, interest rate cycle is coming down. Maybe they will not be able to cut uh, immediately. That may be one of the case. Um, FIIs, of course, continue to sell, and let's go see the charts as they. So today's topic of discussion is it the end of the dollar regime? We have been talking about the end of the dollar regime for last many decades, and somehow it just continues to carry on. But a very important meet is happening today, and that is going to take some, at least more steps towards de-dollarization of the world, and we'll talk about that. Disclaimer, please read it every day, and uh, uh, it's for your own safety. Do also subscribe to the channel if you haven't. Click on the bell notification, and let's get to the market. So you can see here that we've been, sorry, the wrong chart. Nifty should have been there. My team has put Nifty next 50. So Nifty is down 2.9%. The chart of the Nifty is showing a clear head and shoulders pattern. And the 200 DMA is a bit off. The head and shoulders pattern itself is about 1400 to 1500 points of head. So that would mean somewhere near 23,300 or something, maybe a target based on that pattern. A lot of times the pattern may not play out, but maybe like 70% probability is there that it will. Nifty next 50 is now back to again the lows that we saw beginning of October. So this bounce has basically been a false sort of rise. Each of these bounces actually suggesting that every time market comes down, there is buying that comes as demand and puts it up. And gradually, with each of these bounce, that demand will back off. And then there will come a point where, the supply will overwhelm the demand and we go down. So that is potentially what is building up in each of these bounces, bounce, 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 and then, the sellers overwhelm the buyers. Nifty mid cap also doing the same. Each bounce has been met with selling beyond, let's say, 20,000 point that we crossed. So this is also sort of consolidation that is happening in the last 4 months, down 2.5% on this. Small caps dropping very sharply in the last 4 sessions, just one session of an up session, which essentially didn't do any positive gain, but essentially we have lost about 1200 points in the last 4 sessions. So quite sharp down. It may also be a case where it may become extremely oversold in the very short term, and we may see more bounces that may come. Likely that we will go at least to this support. There are several gaps in the charts much lower. I don't know if we are going there or not, but the election day high or this pivotal low is probably one of the or couple of the key sort of levels that small cap index can also look for. Nifty Bank Index also broke down, although in the very start of the day, Bank Nifty was holding on, but later on succumbed to the overall pressure. So Bank Nifty actually has not gotten close to his previous highs this time, And again, we are sitting very near election day highs. So maybe Bank Nifty movement is going to uh, be repeated by other indices, that every indice comes near the election day high at least as a reversal. That may also happen. So minus 1.36% on Bank Nifty. Momentum trends very weak. You can see 16 advances uh, and only 481 gains, sorry, declines, and of course the rest were flat. So big jump in 5%, 2 to 5%, and 5 to 10% kind of stocks, and there were some in the 5, 15 to 10% category also negative. Of course, there were a couple of them in the positive category also, but largely the entire market was negative. FIIs on the previous session have reduced some selling, 2261 crores, but I think today's session might see some larger numbers. We will only come to know later in the evening. DII is continuing the buying at 3200 crores. This is very important that DII continue to get this money, because if DII buying stops for whatever reason, maybe people claw back their SIPs, etc., then there is real trouble for the market brewing. Heat map largely red, no major stocks were in the green. ICICI Bank mildly green at 0.6%. State Bank of India leading the banking, the PSU banking down 2.9%. Reliance down, TCS down, Maruti, HCL, Tech Mahindra, Tata Motors, NTPC, L&T Power Grid, all these stocks down. ITC and Levers and Nestle not falling today at least. Nifty Next 50 was much more red. DLF falling 5%. PFC, REC kind of stocks almost 5% each. Siemens, ABB, Motherson 3% each. Varun Beverages on great results, 2.78% up. DMart also up, it has already fallen much earlier. HAL, IOC also down. Vedanta also down. Naukri, TVS Motors, everything was down. Even Adani Energy came out with some brilliant result, but that was down 0.76% by the end of the day. Sectoral trends all red, nowhere to escape. PSU banks down 4.2% single day. Real estate stocks 3.4% single day fall. Public sector enterprise stocks 3.3%. So essentially, stocks that had run up the most have been punished, except maybe pharma, which in the last 12 months has run up 51% and was down only 1.3%. Anything which was down less than 2% today was considered to be doing well. IT was down 0.8%, FMCG was down 0.5%, private banks, banking nifty, consumption stocks, these were all down less than 2%. Autos, metals, public sector enterprise, energy, commodities, these were the ones that got thrashed. Uh, PSU banks, as we've been mentioning, is also making a head and shoulders kind of pattern, but on a different scale and on a different level. This is the bottom of the election day low that has gotten broken. So that is really a big sign that, banking as a group, PSU banking as a group has really broken down. That was an important support point for that market. And if maybe this is a precursor of all others to follow this, I don't know. But if that is the case, then we are in for a very long and cold winter. And that can really ruffle a lot of feathers. PNB down 7%, Central Bank, Bank of Maharashtra down 6.5, 5.9%, Canara Bank, IOB, all down quite massively. Uh, I think the yield discussion is playing out very big. Maybe this market realized that we are not going to cut rates at all in India. RBI governor also saying cutting rates is very risky. So if yields continue to go up, the bonds on banks books continue to bleed, and that is also going to cause trouble for the banking sector. Hyundai Motor IPO was launched today. I think IPO was at 1920 odd rupees, if I'm not mistaken, and it was the largest public issue of 27,000 crores. It flopped on day one. I think the first 3, 4, 5 minutes it was above the IPO price, and then it just was below here. The IPO price is somewhere here, 1920. And this is kind of very it's a harsh reminder of the Reliance Power IPO, which was the largest public issue at that point of time, I think 2008, and that caused a market top on launch of that IPO, the IPO listing. Hoping that that's not the case this time. But a lot of IPO investors essentially are playing a lottery, flip the IPO on first day game, and hence a lot of folks who would have leveraged or borrowed to buy this probably would have lost money. And is it the end of the dollar regime is the topic of discussion for today's daily bite. So, as you may be aware, there is a formation called BRICS. So, Brazil, Russia, India, China, South Africa, uh, and they've actually come together as a group, and they are now settling 65% of their trade in local currencies. So, BRICS nation total trade amongst themselves is being settled in 65% in their local currencies and not the US dollar, which is somewhat of a big deal, actually, if you ask me, because it has been a concentrated effort by Russia, China, especially, that not to use the dollar for their trade, because US is anyways, seen by at least by Russia to be a enemy state, and US of course had frozen Russian assets, and this that actually started this whole theme in a bigger way, that if any other country can freeze your assets, then why be dependent upon them. So the whole concept of uh, you know your own assets being susceptible to others control is the counterparty risk element has come through. And once the 400 billion or whatever is that number Russian assets got frozen after the Ukraine war, or on the launch of the Ukraine war, um, Russia realized that having dollar assets is, and China also realizing that watching Russia has reduced its USD reserve from, I think, $3 trillion to less than 900 billion right now. I may be slightly off on those numbers, but that is the trend, because they just don't want to at least hold US dollar. They can trade in dollars, but they don't want to hold it. India, on the other hand, is continuously increasing its dollar reserves for whatever intelligence we are having, while the other nations are reducing. Hopefully, we will pause and look at this uh, situation soon. So this summit is happening as I record this as of today, uh, and the BRICS nation share of global GDP is now 26% of the global economy, and it is projected that in the next 10 to 20 years, this is going to become significant as India also grows and China continues to grow, and so on and so forth. Uh, 16th October, sorry, 16th BRICS summit is happening now between 22nd to 24th of October in at Kazan in Russia. Our Prime Minister is also there now. And this BRICS alliance is now expanding. Other countries now want to join this BRICS alliance because they are realizing maybe they are better off not siding the US. So Egypt, Ethiopia, Iran, and UAE have added to the BRICS nation. I think Saudi Arabia is also, either they have applied or they have already been approved. So more and more important uh, countries are coming together, and of course, the key topics are de-dollarization, use of local currencies, and induction of new countries onto the block. So what they are trying to do is that if you have a group going and you are doing local currencies trade amongst each other, then there will come a point where you will be able to float a currency of your own, of the group, with the backing of the local currencies, and may possibly gold as well, and that becomes sort of the the counter uh, currency for the BRICS nation versus the USD. So Putin is saying that we are taking one step after another. We did not drop the dollar. The dollar is the universal currency, but we were banned and barred. So he is admitting that the dollar is the universal currency, but they were banned, and 95% of all trade, of external trade of Russia, is now in national currency. So they have found a way of living without the US dollar practically. uh, US, of course, thought that Russia would collapse without the US dollar. So they are proposing now a BRICS multi-currency payment system. Some prototypes have been made. Say there is some demo happening at that particular meet, and it is likely that gradually some deployment of that BRICS multi-currency payment system may start. China and Iran also are backing the idea, as both are seeking to reduce dependence on the US dollar. Iran, of course, is a completely outlaw country from a US perspective. India so far has not declared its plans for de-dollarization. It is supporting the US dollar. UAE also, because its currency is completely pegged to the US dollar, also relies on US dollar for its cities and economy. And South Africa also is not totally in line with the idea. Gold, however, has performed brilliantly, and the last few months of performance is suggesting that some developments are happening where most of these countries, especially the BRICS nation, are accumulating gold, and they may come up with some sort of a currency which is relatable or related to the reserves each country is holding. So just like when the euro was created, you had some strong European nations and you had some weak European nations, and then they came together with the same currency. Similar to that, one could be looking at some sort of a basket of currencies becoming the backing for the BRICS currency if that comes. And while it on a day-to-day basis, it seems like it is very difficult to dislodge the dollar. But once a credible option is there, the adoption and change takes much less than what normally one would think. While the dollar remains the undisputed powerful currency of the world because it is also backed by its military. So US will do everything to thwart these attempts, and maybe there will be more wars as we go along, trying to disrupt this. But gold is suggestive that gold is basically an antidote to the US dollar. So gold going up means dollar is weakening, and that's exactly what is happening, especially since 2016, where gold has gone up from $1,000 to 2,700, and who knows where we are going. We may be going to 5,000, 10,000. I don't know. So it is telling you that the dollar performance is dipping. However, on the dollar front, when we compare it to other major currencies, so Japanese yen, Swiss franc, euro, etc., there the dollar is still holding up well. Dollar index is at 103.8. Very recently, it was at 90 in 2021. So there, the weakness is not very evident. Although it's a very tricky and interesting game how it will play out. But for I think for Indian investors, having exposure to gold will make sure that if dollar collapses, gold probably takes over in terms of saving that purchasing power for you. And of course, also if there is any upheaval in the Indian market in the equities, like we are seeing as on a day like this, you are seeing that in the last few weeks, as the indices have come off, gold in Indian rupees has jumped like crazy and is compensating for some part of the hedge to your equity portfolio. So this is where we are. The whole story is up for grabs. I really don't know what's going to happen, but yeah, I would like to hear you from your thoughts also. What you think may happen to the dollar? Don't think just very short term. Maybe 10 years, 20 years, 5 years. I don't know how long it takes, but maybe not in mine, but maybe in your lifetimes, you may be having a new monetary system in place. Thank you for watching, and I'll see you in the next one. Bye.